Alrighty, let's go ahead and get started. Welcome everyone to the Hub Live Trading Room. Great to be back with you all during this trading day and during trading hours. First and foremost, as always, we do have to cover our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing's to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like, but that's the main point to take away. All eyes on the Fed today. It's showing that there's likely going to be a rate cut, as was promised, quote unquote. And so, going to be interesting to see how the rest of the trading day plays out based on the overall market reaction to that and the decision that comes out of that meeting. So excited to get into that discussion with Rob, and of course, very excited to interact with you all. So let's kick off. Rob, how you doing?
Good, Zach. How are you? Happy Fed Day, everybody. Welcome to the Hub Live Trading Room. We will be stopping at 1:45 to get ready for that announcement. And more importantly, I mean, there is two steps to this. We are very concerned about whether or not the Fed does actually cut, even though they have certainly led us to believe that they are. And then the comments afterwards, a lot of people talking about this hawkish Fed cut coming, meaning that they do cut, but then they say they're going to go on pause. The market was kind of hoping for another backup cut in January. Probably not going to get that. So, how does the market react to that? Do they get what they already expected, but kind of being on pause? Lots to talk about, and we'll talk more about that in the event this evening. We've already had the Fed meeting by then for the outlook for 2026, and certainly the Fed's going to be a big part of that. So we'll discuss all that then. Hopefully, you'll be joining us this evening. Taking a look at the SPY, you can see that the importance, I guess, of where we are now. I have been talking about the recent highs there in October and going up and testing those highs, going through this bit of a consolidation after that run up that has held so far from the Thanksgiving holiday shortened week, lower volume week, but yet it's held up so far, tapping the 10-day moving average on the low today. And I think what happens today with the Fed is going to go a long way to telling us whether or not we can break through that resistance and continue up, or if we double top. It's still worth noting that the algorithm still has that wave four green. Still not convinced that that's the wave four, that that's done, and that we're going to go higher. We could have a double top and reverse down. So it is a pretty important Fed meeting, and I expect some market volatility from it. And maybe not as much on the actual news, but in the press conference afterwards, where certainly Chairman Powell is going to get peppered with questions about any further plans for rate cuts. Are they going to go on pause? All that kind of stuff. So that's all we'll be watching for. Run through the markets real quick, and then we'll get to the AI signals. I did want to jump straight to the IWM because that's the one market that has taken out its recent high. We'll look at the Dow too because it may have today. It's pretty close. But looking at the interesting part here was wondering if, because we had the three here, and then this four coming back, or excuse me, the five was here, and then if that five was done, you look for a fib retracement because the extension was already above 100%, and we did come back 50%. So we retraced 50% of that move from the four to the five. So all that made sense. And so that could have been the end of that five wave pattern. And then we are looking to see what new impulse pattern may come about. In other words, that five was over, the correction after the wave five was complete, and now we start anew. But no, the five moved over. So that didn't happen. And then that makes you wonder what's going on from here. Is this a big zigzag pattern in here? Well, we could go from this low that was pretty extreme to that first high and bring it down here. It's right around 61.8. And that would give us a significant potential target higher on the Russell if that were to play out. So yeah, lots to think about. And the reason I'm jumping to the Russell is it's so in tune with rates and what's going to happen with rates today. Even though when the Fed hikes or cuts rates, it's more of a effect on banks' overnight lending facilities rather than injection into the economy. But the Fed has other ways of injecting liquidity, and we'll be monitoring that over the next few weeks to see if the Fed does indeed inject liquidity. So let's go to the DIA, and it didn't take out that high. The new high that was made in November, we kind of came up here, moving back down. Once again, this is fine price action. Nothing wrong with this. Uh, if we gather ourselves and then take another shot at running to the upside. But also the possibility when you're consolidating here that it's a double top and we roll over. So everything's on the table at this point in time. The VIX isn't really telling us too much, a little bit higher today, but not significantly so. Can we run up to this level? That would indicate a double top and that the market's rolling over. Or can we come up here, correct the slightly oversold condition from the 10-day moving average and slowly work our way down through the end of the year if we do get an end of the year rally and maybe take out that 15 level and move down to 12 and a half. We'll watch that, see how that plays out as well. Let's go right to the bond market. Price is slightly higher right now, I guess, in expectation of that cut, or just the fact that prices had sold off so much. And remember, this is prices on the TLT, the 20-year, and therefore rates ticking up. Last couple of days, prices have ticked back up, yields down a bit, but it's just because we're too far from the 10-day moving average. So we haven't even gotten back there yet. So we still have the opportunity to extend down to this 100% extension, which I do think, especially if we get a hawkish Fed statement, regardless of whether they cut or not, I still think it's a possibility for rates to move back to the upside. And then with the head and shoulders pattern, that would also lead you to believe that maybe the 100% extension doesn't hold and down we go to 161.8. What a conundrum, to go back to Alan Greenspan's terminology, that would be for the Fed if they cut and rates continue to tick up. We've pretty much gone back to that previous floor on the TNX, the 10-year. So this is rates on the 10-year, TLT prices on the 20-year, TNX rates on the 10-year. The wave 5 ends. If it extends less than 100%, you go back to the previous floor. So we've pretty much completed that. Now what happens from here? That'll be interesting to see as well. If we start a new 5-wave pattern, maybe we just churn. Maybe we stay in this channel. And so basically the channel pretty much encompassed the majority of the wave 5 and the retracement back to the wave 4. And maybe rates stable out a little bit. What liquidity the Fed did inject and then took right back out was on the very short end of the curve. Didn't even affect the 10 or the 20-year. And I have my conspiracy theorist part of my mind that makes me wonder, are they artificially trying to steepen the yield curve, which they did, or are they just taking advantage of these higher rates on the short end while they believe they're going to be there for their own balance sheet? Because remember, the Fed's independent and they make money too, and they make a lot of money. So that may not be any part of it. It's just something that I think about, and you have to wonder. But it's just speculation, conjecture, whatever. And then the dollar still hanging in there. Just kind of surprised the dollar hasn't had more of a bid under it with the fact that rates had ticked up. Dollar actually went down as rates were going up, and that doesn't really make a lot of sense. So many people in the currency markets talk about there's more money in the bond market than there is in the equities markets. A lot of liquidity and volume in the currency markets as well. And I know there's a lot of stuff going on globally with Japan, et cetera. And so these numbers can be a little bit skewed from some of that stuff. Another unwinding of the yen carry trade and all those things that are going on. I get it. I still just feel like it's interesting I almost use the word concerning, but I don't know that it's quite concerning because we're in the Goldilocks channel. So it's hard for me to say this is concerning when I've been talking all year about how this is the ideal channel for the dollar. It's not too low. Don't worry about other countries dumping dollars. Not too high, not significantly affecting international companies from the exchange rate or companies with international trade. So you can't have it both ways. I can't state that this is the Goldilocks triangle and then come back and say it's concerning that the dollar hasn't had more of a bid under it. It is in the long run okay. It's just thoughtful, thought provoking, I guess would be the best way to put it there. That goes through the markets. Everything else that we would look at is subject to change based on what happens this afternoon. So I don't really see too much of a purpose in going through all that. And we can look at natural gas, which had that big move up. And then immediately it was news from President Trump, and then right back down. And I've been talking about trying to catch this move from 15 to 17 and a half. We did get to 17, so we got pretty close, but it did it in a big gap up day. So we couldn't really participate in that move. We're back down testing the 50-day moving average. That might have been it, or maybe we just kind of consolidate here and try to take another run. It did satisfy that zigzag pattern, and maybe it got a little too cautious on wanting to make sure that it broke 15. But I think the history of showing that it ran up there and then corrected quite a bit in this zigzag pattern was enough to raise caution and wait. And then sometimes that happens. The move is all in one day, the big gap up move. So we'll continue to keep an eye on UNG and see if there's another entry at some point on breaking above 15. Supposed to be a big cold snap coming this weekend. Maybe that puts a bid back into natural gas. We'll wait and see. And then oil doing just fine, breaking out of that triangle, which I think is to be expected because of the fact that OPEC over the Thanksgiving holiday weekend met and came out and said they were not going to cut production. Remember, that was my fear. Would they, since they increased production on these two spikes up in price? Now that we've come down quite a bit, if we start to break to the downside out of this triangle, would they announce a production cut to hold the price in? But they said no, they're going to stand pat. And I do think that leaves room for a continued break to the downside on USO, especially considering consumer confidence numbers that came out weren't that great this week. We know the jobs market is pretty rough, interest rates going up. Inflation a little sticky. We'll talk more about that tonight as well and where that could go. But oil's fine, even though we don't see it reflected as much at the gas pumps as we would like. And that's a whole conversation for another day. I do want to look at the metals and the cryptos real quick, though, because they're going to be significantly affected by today, I believe. We'll see if GLD continues to move higher on this. I really like this breakout. I don't like it. I don't like this stuff as much as because you don't know when this kind of action is going to come. When you go vertically like that, it did go vertically for a while, but as I've Ted said, week in and week out for years, when you go vertically up, you come vertically back down, and it's anybody's guess when that's going to happen, especially when there's no zigzag in the wave three. At least if there's a zigzag, we can have an idea of where to watch for resistance. But when it's just straight up like that, it's harder to know. So we did get the correction. Now we're getting a more normalized breakout here, running on the 45 degrees. How are the metals going to take what the Fed does? Is there going to be concern about inflation with another rate cut and a potential injection of liquidity? I'll be watching for those words because Chairman Powell tends to try to sneak that stuff in his comments as far as liquidity. He doesn't come right out and say, hey, we're going to inject liquidity. But they have given little tidbits on, letting their balance sheet shrink back down into the beginning of December, and then their plan, to inject liquidity. You have to read between the lines. He doesn't like say it in a nice run-on sentence like that to where it's really clear. You just have to pick and choose the comments to figure out what he's saying. And they followed that plan a little bit, at least the runoff part, they followed to a T. The injection part, not yet. Again, there was a very short-term injection and immediate uh, re recall, I guess, of that liquidity. I was going to say rejection, but it's not a rejection. It just they put some in and took it right back out. So maybe there was a few more bonds and treasuries that needed to roll off their balance sheet, and maybe they have started injecting. It's just not reflected yet in the liquidity charts because there were a few more bonds and treasuries that needed to go through their expiration dates. That's what they usually do. If they're not really concerned about having to sell the bonds and treasuries back, they just let them run off and expire. So they buy them and let them run off and expire, and that's the end of it. And that shrinks it on its own without any sort of action being done. Um, Usually, it's more of an emergency type thing if they go in and buy real quick or sell before expiration. But it is their normal status quo to let those run off unless they're in a massive injection phase and they roll them out and continue with the same ones. So again, I'm going to be glued to his comments, see if there's any tidbits that come out of there. Silver hanging in there, a little bit better than gold, and that's to be expected, I think, with the amount of silver that's being used in the technology industry now. So they flip-flopped, as I've been talking about, over the last year to 2 years on who's going to lead. Silver leads, then gold comes back and leads. There was a long period of time where silver led and then gold took over. We did have kind of that same move up here in silver, but not quite to the degree of gold, as you can see from the chart. And then retracement a little bit above the 10-day moving average. So I'm going to watch really closely how the metals react to what happens this afternoon. Um, if there's a view that their actions could stoke inflation again or cause a tick up even in inflation, I think the metals keep a bid. If the metals industry is convinced that the Fed is doing a good job of playing the middle ground, then that wave five might be over in silver and we might start to head back down. So just so much to take a look at. I do think the cryptos will be involved, but I think they're going to be more on the liquidity side rather than the rate side. I don't think the rate, whatever they do, is going to affect things unless they don't cut. If they don't cut, it's going to be rough on the equities market, and that'll be rough on the cryptos as well. We are trying to creep back up towards that 55 level, which acted as support here. We broke it. We said 45 was going to happen pretty quickly if that occurred. Now we're trying to recover a little bit. We had the 10-day too far from the 50-day, so it's ticking back up. So it's closing that gap. And it also resides right at that 55 level. So it was support. Is it going to test it and be resistance? At least the BITB, the ETF we look for Bitcoin, we'll be watching that. And if we reverse and head back down, then it is danger, danger, Will Robinson time if we come back and test these lows again. But we're almost to that resistance level on Ethereum. ETHW been doing slightly better than Bitcoin, and almost to its 50-day moving average, which coincides with 25, which is old support, and therefore new resistance lines. So for the cryptos to become attractive again, we have to break those levels. We got to get back above 55 on BITB and back above 25 on Ethereum. So let's take a look at the AI signals and see. I think it's pretty interesting here that Principal Financial Group is leading the list with a pretty solid score there, rounded up to 83%. That one looks really, really interesting. So maybe that could be a good place to be. As you know from my comments in the past, that financials tend to do well in a monetary easing cycle. They do better than they do in a tightening cycle. So that could give a little bit of support to PFG moving higher. And I know we're looking at AI charts, et cetera, but it's never a bad thing to have fundamentals backing the proposed moves. And That one looks really solid right now. Let's see what the ADX looks like. Look how good that ADX and the DMI is. Um, Look, that looks really solid. Um, we might we might actually we'll watch and see how it acts during the Fed announcement. Perhaps we might miss this part of the problem of waiting till the show to go through these signals. Um, but maybe it's more prudent to do so and see how they act. And if they act okay after the Fed announcement, then perhaps you'll see that one later this afternoon or tomorrow, as long as it doesn't run away from us too much today. It's a pretty good spot right here to get in. And we got a $4 move still to the upside here on PFG and then PLab. Um, Goodness. Um, Phototronics. Wow. If you saw the list last night and you were interested in getting in this one this morning, how frustrating was that? That you had a potential move from 25 to 27 and a half, and then you got this incredible rocket ship up this morning. So we obviously missed that one. Would have been nice to be in that, but the signal came out last night, so there was no possibility of getting in here. Just a shame that didn't come out a day before, right? And then we could have caught that move. That would have been wonderful. And oftentimes we do get those quick moves, but in this case, there was no opportunity to do so. Then we have another one, COHR, that's above 75% as well. Also looks pretty good. Nice little zigzag there. Kind of like that. Let's see what that looks like. Not sure. We're gonna have to look at the options on this one. Um, Boy, right at the 61.8% level. We're already at the 100% extension, and as you know by now, or should know by now, if you have a 61, a 50, or a 61.8% B wave correction, you look for 100% extension. And then, if it occurs within a wave three, there's a higher possibility that you go to the next fib level, which is 161.8. And look, that actually coincides with the AI target. We had a lot of those a few months ago, and they tend to work really well. Obviously, when you have two different things, you've got the AI, where the only part of Elliott wave that's in all those data points with the AI is the first day of a wave three. And then the rest of it, we put the Elliott wave on and do the analysis for. So we have all those data points in the AI that are giving us this target, and we add in a zigzag here that gives us pretty much the same price level for an extension. So that one looks good if there's options available. Not super familiar with this, so let's take a look at what the options look like. Well, at least there's some open interest. Maybe not as much as we like, but there's some. So let's see. It has weekly, so that's good. We would probably look at maybe the March. Um, this is one where it'd be you could consider these Jan 23 weeklies, even though there's not a lot of open interest there. So let's see if there's any sort of open interest on March. There is. So, well, how are the spreads? Wow, it's expensive. Holy cow. Look at those premiums. What in the world? It's a $200 stock. These are insane valuations here on the bid ask spread. Goodness, the spreads aren't that wide. They're actually really good. Um, Solid open interest where we would look to go. Um, Maybe we're just too much in the money. Let's go a little bit further out of the money and see if we can get something that's a little more reasonably priced. Um, it's got, it must have had a split at some point. It's got a lot of 2.5 point strikes, so that plays into it. So when we get down here into the Delta land that we'd be interested in, we get tighter or lower. This is more normalized. Um, it's crazy how things have changed over the years when there used to be so little open interest down, and it's like the out of the money options were forgotten. Nobody cared about them. Everything was at the money or in the money. And now you can see the market makers are on to us. They know that, we're looking at here, and a lot of other traders are now too. Been spouting it for a very long time about that delta gamma acceleration that exists. And as we have more option traders coming into the market, and the options market is growing, and then more people learning and understanding and figuring out this kind of stuff, the market makers, look what they're doing. They're creating even the 38 delta with 129 contracts has a dollar 30 spread on it. Um, Pretty frustrating, especially when you saw that those real in the money options had nice tight spreads. So now they're realizing people don't trade up there anymore. So the spreads are tighter. Where's the activity? It's down here where they can widen the spreads and take more advantage of us. So that's a little frustrating. Um, and that's on a weekly. Let's see what the April, um, the March monthly. Goodness, the monthlies are expensive again. 35. Look at that. I don't know. There's some red flags on these option prices. Um, my goodness, they're so high. March isn't that far out, and for a 30 delta, you're going to pay $13, and it's at 260, well above where the price is. I don't know. I'd have to do more analysis there, but those are some red flags. I don't want to spend the time going through that now. Let's take a look at the bearish chart. We're getting some scores that are pretty interesting considering the market going up. And you can see Striker here, maybe continuing down a little bit, even though it's only a 62% score. But what's interesting to me when I first glance at the chart is there was some support there that was broken yesterday and being tested today. So 340 could be in the cards, be about a 10-point move lower. Nice zigging and zagging to the downside there. Let's see if that's qualified, how far that bounce was on that zigzag. And 61.8 even gives you a target a little bit lower than the AI target. Um, Not a bad idea to balance your portfolio, I don't think, depending on what the Fed says. A little bit below the 10-day moving average, but correcting that some today. Stryker, familiar with this company. Let's see if the options give us anything to be excited about. There's the March again, and the 380. Gosh, still a $2 wide spread. Um, This, these spreads are just really frustrating on these out of the money options. Makes it more difficult because I talked about this before. Um, the 161 contracts, that's enough. Anything above 100 is okay. Obviously, the more open interest, the better. $2 wide spread when you're call the midpoint 610, 510 between that, a dollar 20 or 60 cents, I guess it would be 610. So 60 cents should be the spread, not $2 for us to be happy. If we could get in at 610, still paying a dollar, still paying too much. And then how do we get out? Are they going to let us split the spread to get out? If they let us split the spread to get in, remember, that's always my concern. Um, some people, I know there's been comments, some people trading some of these lower open interests say, oh, I was able to get filled getting in. Yeah, they'll let you in. It's the getting out part. That's where the concern is. So they might make you sell at the bid. They may not split that with you at all. Uh, Hard to know what the market makers have done with their book, how they hedge off a position. They don't want to trade directionally, so they hedge everything off. And why would they want to take the risk of trading directionally when they're guaranteed making money just from filling orders? It's easy, easy for them. So that was a little frustrating on the width of the spread. We could take a little bit closer look at it, but um, we'd have to go in the money there. Then on the wave five bullish side, I still feel like we need to see what happens today with the Fed as much on these wave five bullish as anything, because those wave fives could go lower. Um, if that wave five is done, that's a nice trade. You'd hit the wave four before the AI target. So that could work. And then DocuSign sitting on a whole bunch of support. It broke it, tested that low from November and got back above it. All that looks good. Trying to get a bullish 1030 cross here. Interesting that we ran up, but then came back down to make that new low right when we were about to get the cross. That's why you let it happen. It looks enticing back here in this area where the 10 days coming up towards that 30, and it looks like, all right, they're going to cross. So I'm just going to go ahead and get in. Let it actually happen. Um, heard me talk about the ADX breaking above 20. Sometimes it'll roll up to 20 and roll over. Let the actual break occur. Even if we miss some of the move, it's okay. And then right here with all this support, I find this really interesting. I've traded DocuSign before. Let's see where the liquidity is in the options now. But we just need to see the overall market reaction on these when we're in sectors that aren't so heavy into tech. And here's the wide spreads again. Now, some of this may be because it's Fed day, in fairness. And the market knows, just like I do, that Fed days are wild on intraday charts with volatility. And that's why maybe looking tomorrow after all this calms down on some of these that we're looking at now might be the prudent thing to do, especially with those wide spreads where some of them don't make any sense for the width of the spread. It could very well be that they're just setting up and being ready for, the market tends to move so fast on these Fed days. I love it when there's a big, quick initial move, because it's a real quick fade trade, very short term fade trade intraday on Fed days. It works so much of the time, but that volatility and moving so fast makes it more difficult for market makers to hedge off a position once they take it. And so they're allowed to widen the spreads. And this is a good time for them to be able to justify it. We know what they're doing, but we can't do anything about it. And you look at this, Frisia, this is in the healthcare industry, healthcare management company. So we have 22 and a half here and then 20 as a stair step or two plateaus, if you will, of support. And then it busted down through it. A little surprising there. And so I'm looking at this. Is it a possible strangle? The real low scores on the sideways, where the AI says, all right, here's the boundaries, here's the one standard deviation, but we don't really think it's going to stay there. That's what the low scores mean on these drop signals. And that's where a strangle can come in. And just noted that a 30% return on one of these kind of fades is a good return on a strangle here, where 30 is on the lower end of what we'd like on a regular strangle. So you have to be a little quicker on your exits. But these low scores on these drops like this, you could easily make a case for it'll run back up and test 20. Well, that'd be a great trade in the strangle if it did that. Um, so uh, something to watch there. That could be a potential strangle there on the time strategy charts as a fade trade. All right, so I'm not going to keep rambling because I did want to leave a few minutes. We'll have to come back and analyze all these charts again um, after the Fed announcement today, and again, more importantly, the press conference afterwards. So, Zach, take a few questions here, and then we'll wrap it up and get ready for the announcement.
Sounds like a plan. Got a question for you from Lana on Uber.
Yeah, they've been talking about Uber on the financial networks quite a bit. Um, they're branching out. I think Uber's doing some good things, um, but you can see how volatile the stock's been. Uh, Big move down, recovered it, got too vertical. What goes vertically down comes vertically back up. So that works both ways, by the way. I always talk about what goes vertically up, oftentimes comes vertically back down. Well, if it goes vertically down like that, a lot of times it'll come vertically back up, especially if the AI doesn't identify this as a drop with a sideways expectation. Note that that's not there. And that gives you a clue that this vertical move back up may be in play. But then we came right back down. So we've just gone boom, boom, boom here very quickly. Um, this wave four needs to hold. I'd have to look and see what if this was earnings or what the news was. Um, I know they're spending some money on some stuff, and the market never likes that. Um, but if we can hold this wave four low, it's in a pretty good area in that 61.8% level. And perhaps we do at least short term because now we're oversold from the 10-day moving average based on that movement today. And this could be a wave five to the upside if this holds. So we need a couple more days of information, or maybe you just trade it for the quick snap back, which the stock obviously can do on recent history, back up towards the 10-day moving average. Be looking for maybe like a 5 point move, something along those lines.
Very well. Thanks, Rob. That actually covers all the questions for today's session. So, just one final reminder, I'm going to put the link into the chat to register for tonight's EWO Focus event with Rob. We look forward to seeing everyone there that can attend live. And if you can't attend live, still feel encouraged to register, as that will enable you access to the recording after the live session concludes. So we hope to see those who can make it live. And other than that, back over to you, Rob.
Sounds good. And I again second what Zach said. Hope to see you all tonight. And we won't spend a whole lot of time on it, but it obviously applies to the outlook tonight. So we'll be making some comments on the results the market gives us and the results that the Fed gives us. So hopefully we'll see you all this evening. Have a great rest of your trading day. I'm going to go get in front of the TV, which I rarely do, but this one I'm really interested in because I think it's a big deciding factor on where we go from here. So enjoy the rest of your afternoon. We don't see you tonight. Look forward to talking again soon. Take care, everybody.